I thought we'd start out today's video with something a little bit inspirational, something with a little bit of a relevance. An athlete won't judge you for working out. A millionaire won't judge you for starting a business. A musician won't judge you for trying to sing a song. It's always people going nowhere that have something to say. And there might be a lot of you guys watch this video right now that you have something like that might resonate with you, with something you've went through in the past in regards to your life, or something you might be going through now, or maybe something you'll be going through in the future. And so I thought something like that would be phenomenal. I also want to show you guys this here to start this video out. And the reason being is it's political season, right? Seems like everybody is talking politics right now. Obviously, we're gearing up for the presidential election, and both sides are trying to convince everybody that the other side is absolutely the worst, and we're doomed as a country if the other person gets elected, essentially. And both sides are going off of different points, but they're basically trying to convince everybody that if the other side gets elected, we're all doomed. It's all going to be night-night for us all, right? And both sides are convinced that if the other one gets elected, essentially that's going to be the situation, right? And so I thought I'd show you guys this here. Since we're in political season, I posted this actually in a private group a few days ago. Since we're in political season the next few months, here's an important reminder to all stock market investors. Since I've been alive, the only president to have a really bad stock market is Bush Jr. That's it. Basically, almost every single president, the stock market is going to do very, very well. Almost every single one, regardless of political party. And if we look at since I've been alive, right, I basically came alive in Bush 1, right? Pretty good stock market for him. Clinton, obviously, tremendous stock market. Bush 2, not a good stock market, right? And then obviously Obama, very good stock market. Trump, very good stock market. And Biden's actually had a good stock market, right? And so just keep in mind, as all stock market investors, like whoever gets elected, the odds are the stock market will go up under their presidency, essentially, okay? Now, in this video here today, I want to speak about 4 things. We're going to talk about a stock I sold out of, and I already regret it. And we'll speak about why I already regret it, okay? Second thing we're going to speak about is what to expect the next, let's call 60 to 90 days in the stock market, because we're about to go through some major fluctuations, and I'm going to show you what's likely to transpire here. The third thing we'll speak about is earnings calendar this week. Huge week for earnings in regards to the ton of stocks. I'll tell you what stocks I feel good about for this week and what stocks I don't feel so good about. And the fourth thing we'll speak about is actually a really important subject. A lot of people ask me this. I buy stocks every Friday. Unless the market's closing on Friday, then I'll buy it on a Thursday. But essentially, I buy stocks every single Friday. Why do I buy Friday specifically? Why not Monday? Why not Tuesday? Why not Wednesday? Why not Thursday? Why Friday? And so I'll give you the reasons why I buy every single Friday, okay? Hope you guys enjoyed this video. Appreciate y'all being here as always. Thanks so much for being subscribed to the channel. And I also want to send a special thank you to everybody that doesn't just watch this main channel, but additionally watches the reaction channel where I react to videos, articles, just different things going on in the market. I appreciate y'all that are subscribed over there. We're about to hit 48,000 subscribers likely tomorrow on that channel. And so we're on the path to 50,000. And then, you know what? That's going to be the next channel likely next year at some point. We'll get a 5th silver play button up there for that channel. So I appreciate y'all that enjoy that channel over there. Pin comment here today. I'll put my private group as well as 1000xstocks.com if you're looking to become a great investor, if you're looking to take your game up to the next level, that you're looking to take this stuff a lot more serious. I'll put the application as a pinned comment down there. You click on that so you can get access to my private group as well as 1000x, okay? All right, guys, so look at this 5-year chart. You gotta be flipping my flapjacks. Wow, 203% up this stock is in the past 5 years. Absolutely tremendous performance. This stock has well outperformed the NASDAQ. It has smashed the Dow. It has smashed the S&P 500. And don't even compare it to the Russell 2000. It's a night and day difference. This stock is absolutely a beast. 200+% in the past 5 years. I sold the stock a few months ago, or a couple months ago, right? 2 or 3 months ago or so, roughly, right? And I regret it. And look at this. This is their latest numbers that just came out a couple days ago. Their revenue's up 14.5%. Their income from operations is up around 50%. Their net income's up 46%. Their diluted EPS up 46.4%, right? Their balance sheet is absolutely as pristine gets. $197 million in cash and cash equivalents, no debt on this company. They're now up to stockholder equity of over $1.2 billion on this company. Absolutely incredible. Since this company went IPO 20 years ago, went IPO in 2004, the stock is up 1,371%. Absolutely smashing the Nasdaq's return over that time, smashing the S&P 500's return over that time, and smashing the Dow and the Russell's performance over that time as well. $100,000 in the stock at IPO would now be worth close to $1.4 million. Absolutely incredible. Now, if you also factor in the dividends you receive from the stock, you're likely well over $1.4 million if you had invested those dividends along the road. You might be closer to like $2 million now. Absolutely incredible what this stock has done. This stock is Texas Roadhouse, a restaurant chain. I mean, this isn't some new age software company, some AI specialist. It's a flippin' flapjackin' restaurant. You gotta be kidding me, right? They sell steaks and ribs, and they got those delicious rolls that you go in there and the little cinnamon butter. Oh, baby, those are good, right? I went with my kids last night. My wife was going to a concert, so I took my 3 boys. We went over to the Roadhouse. Phenomenal, as always. After tip, for the 4 of us, it was like $64. $64 after tip. And I tipped like 20%. It was like, I think the bill was like $53, $54. And I tipped 10 on top. Like, where are you getting out of for 4 people? I know it's kids, like 3 of them were kids, but still, like, for under $70 nowadays, that's insane, right? And it was delicious. And we had leftovers. Right? Now, why did I sell this stock? Well, the reason I got out of this stock is the valuation. The valuation got very stretched on Texas Roadhouse. The forward P, if I look at, because I own 2 restaurant chains. Now I own 1 restaurant chain, but I had owned 2 restaurant chains, Texas Roadhouse and Cheesecake Factory. And if I looked at the forward P, the 2-year forward P, Texas Roadhouse just way above. It's like over a 2x above Cake. And I expect Cake to have somewhat comparable growth in 2025 and beyond when it comes to amount of locations opening, like same-store sales, those sorts of things as well. So I looked at valuation, and I was just like, valuations got really stretched on Texas Roadhouse. That's why I got out of it. Not because it's a bad company. It's a great company, obviously, right? Now, Cheesecake is coming out with their earnings of, 3 or 4 days from now, right? And I'll be honest with you, I don't think Cake's numbers are going to be as impressive as Texas Roadhouse. Texas Roadhouse has just been executing at a higher level than Cheesecake. Now, that does not mean Texas Roadhouse forever is going to be executing at a higher level than Cheesecake, but the bottom line is, and the fact is, Texas Roadhouse has been executing at a better clip than Cheesecake Factory, just factually on a numbers basis, right? And so now we got these Cheesecake numbers coming out. I think the numbers are going to be good, but they're not going to be as good as Texas Roadhouse. Bottom line, those Texas Roadhouse numbers are special, right? And we can see this in the year-to-date performances with these 2 stocks. Look at Texas Roadhouse. Texas Roadhouse up 40+% this year, right? Cheesecake's up 11%. So Cheesecake's doing good. And let's say Cheesecake has a good earnings, the stock goes up. Next thing you know, the stock's up 20% year-to-date. That's good. That means Cheesecake's having a really good year, right? But even if it's up 20% for the year, it's still getting over 2x'd by Texas Roadhouse. Texas Roadhouse up 43%. So let that sink in for a moment. That's the difference between a stock doing great and a stock doing good. It can be massive differences in kind of alpha here, right? So a lot of people ask me, why not sell top positions? When I have these top positions, they've made me a ton of money. Why not sell out, right? And this Texas Roadhouse example is exactly why I don't like to sell out of top stocks, like really great companies, because you end up regretting it. I regret already selling out of Texas Roadhouse, and it hasn't even been very long. And so when you own truly great companies and you sell those companies just because, I made a lot of money, it's usually a bad decision. You should usually just hold them, just to be quite frank. And if the story ever changes and you feel like that company's not being such a great company and it's, moving down the tier to maybe a good company or average company, then you can get out of it, right? But when a company is executing at the highest level possible and is making you money and the company's numbers are absolutely phenomenal, it's usually always a bad decision to sell, even when it's valuation based, as it was in my case with Texas Roadhouse. And so this is why I don't usually do this, because I end up regretting it, right? There was a time period where I used to own around 10,000 shares of ELF. I own 1,000 shares of ELF. Do you think I wish I owned 10,000 shares of ELF today? Of course I do, because it would be like $1.8 million worth of just ELF stock alone. Of course I wish I never sold 1 share of ELF, ever, right? And so when you own truly great companies, truly great stocks, it usually doesn't make sense to part with them. Everybody always, they make a profit, as I made with Texas Roadhouse, and then they want to get out of it. If the company's executing at even a higher clip than you expected, it's better you just hold the dang stock and go through if you own average stocks, companies that aren't that good, and you make a profit, get out and run. But when you own truly great companies and they make you a profit, like let's say Amazon, right? Amazon, we've made $79,000 on that. So I could look at Amazon. They report earnings this week. We'll speak about in just a moment if I think their earnings are going to be good, whatever, right? So 70% I made around $80,000 roughly. I could look at that and I could say, man, let me sell my Amazon shares because I made around $80,000 of profit and I have $192,000, right? What am I going to do with that $192,000? What am I going to do with it? Let's say I take it out of the market. Okay, I'm going to put it, in a savings account? Do you think a savings account over the next 5 years is going to outperform Amazon stock over the next 5 years? I could, buy another real estate investment property or two with that $192,000 and use that as down payment. Do I think my real estate investment property is going to yield me better over the next 5 years than Amazon stock? No, of course not. Of course not. Like Amazon's a truly special company with several truly special business models. Between the AWS side, plus the advertising side, plus the e-commerce side, those are three special businesses they own. Like my real estate property would not outperform Amazon over the next 5-10 years, nor would a savings account, nor would a CD account. So when you look at it from that perspective, it's like, then I could put it into another stock, okay, right? I could, but why would I sell a truly great company just to put the money in another, what I think perceive is a great company or could be a great company? Usually it just makes sense to hold and then buy a new company with new money. Or sometimes you're going to buy companies that aren't that good, right? And then you can move money out of those companies that you then realize over time, oh, this isn't actually that good of a company. And you move that money from a weak company into a much stronger company, right? And so I've done that before where I thought, I'm buying a good company. Like, you're going to have a fail, right? In the stock market, like there's no such thing as winning them all, right? I was actually somebody shared a great clip in the private group that I got to see just a little bit ago. And they shared this clip. It was from 2007. And it was like Tiger Asset Management or whatever. And speaking about some of the problems they could see coming in the market. But while I was watching that, there's toward the top of the video, CNBC video, right? They're talking about Warren Buffett. And they're talking about Warren Buffett just took a big stake in, it was Burlington Northern at that time. This is like 2007. And then two other railroad operators. No, the railroad operators at that time were right around all-time highs. This is incredible. And then right after that happened the great financial crisis. So even the master Warren Buffett can get his timing horribly wrong. Like he should have waited a year to build out those positions because he could have bought those railroad stocks for so much cheaper. But you have a fail rate in the market. It doesn't matter how great you are, you're going to miss some, right? So let's say you think you bought a great company or you think you're getting into a great stock, and over time you realize, this isn't quite it. Okay, it's time to move on. I've done it plenty of times in my 15 years of being in the market where I got in, I was excited. I'm like, this is going to be a good company. It's going to be a good stock. And then they report over time and I realize, this isn't quite going the way I thought it was going. And I made a mistake here. And then I moved that money from a weaker company into the next company that hopefully is a much stronger company. And as long as you're a lot more right than wrong, that's all that matters. I can tell you in the past 15 years in the market with the stocks I bought, a whole lot more right than wrong. And that's all that matters in this game, right? And so, because you will have a fail rate. Everybody does, including Mr. Warren Buffett, right? That's why a lot of times it doesn't make sense to sell top positions. You're just going to look back and you're going to likely regret it. Weak stocks, okay stocks, cash out of those, move them on. Next one up here, what to expect from the market the next 60, 90 days. And we'll get into earnings I feel good about this week and why I buy stocks on Friday specifically. So where we want to start out here, looking at the VIX. We had a major pickup in the VIX over the past month. The VIX is up about 24% in the past 1 month. That's what we call a major pickup in volatility in the market. Now, if I told you the VIX was up 24% in the past month, and I told you, what do you think the S&P 500's done? A very intelligent guess would be the S&P 500 went down, at least a few percent. It'd be a very intelligent guess, because more than likely that's what's going to happen. But surprisingly enough, the S&P 500 over the past month didn't go down. It didn't really go up either. It's up 0.02%, 0.02%, right? So it's basically flat. It's actually a win. It's actually a huge win for the S&P 500 to have not gone down despite the VIX going up that much, it speaks volumes about kind of the weird market we're in right now. Now, if you look, this is a study they did over the past 20 years. It was a 20-year average of what are the worst months for the stock market. And what they found for the New York Stock Exchange Composite, August and September were the worst months for the stock market. For the S&P 500, September was among the worst stocks for the stock market. And for the NASDAQ 100, September also the worst stock, or one of the worst months for the NASDAQ, right? So overall for the stock market in general, August and September are known as not good months. The summertime kind of in general, like June even, look at June crossed all three. June was among the worst months in the last 20 years for the New York Stock Exchange, S&P, and the NASDAQ, right? So generally speaking, June, August, September, July is a kind of an outlier. July is really usually a good month for the market, right? But generally speaking, the summer's not it for the stock market. That's why the whole famous saying of sell in May and go away is such a famous saying, because most people know stock market's usually rough in specifically August and September, right? And guess what we're going into? August and September. Now, this study they did for a 40-year history, 1980 through 2019. So they took it over a 40-year history, and this looked at the S&P 500. And what they found was only 2 months that were negative. Only 2 months that were negative. Guess what months they were? August and September, what we're about to go into right now. So, and that's over a 40-year time. That's 4 decades, right? So the moral of the story is, if you're going to have to guess, is the stock market going to be up or down for the next 60 days? More than likely, the stock market's going to be down. It's not perfect, right? Some years it's up, but if you had to play the odds of probabilities in this, if we're playing the roulette wheel, the chances are we're down over the next couple months. Now, to add some extra insanity to this whole situation, right, is we're in an election year. Remember, we spoke about the beginning, we're in a presidential election year, right? So what about election years? Well, this looks at the 2008 election. This was Obama versus McCain. Look at how much the stock market tanked right into that election. Look at where we were at, kind of August, September, and then we just tanked off a cliff going right into that election. And then right around the actual election day, we bottom out the market, and then we start to head up a bit from there. This looks at the 2012 election. This was Obama versus Romney. And look at this baby. Look where we were kind of late September here on the NASDAQ, right? Or this is actually the Dow I'm looking at. We were at 13,600 or so back in kind of September timeframe. And then look at how much the market tanked right into the election. And it bottomed, like literally right around the election is right where it bottomed, right? And so we lost about 1,000 points in the Dow. And keep in mind, 1,000 points back then was a lot more than 1,000 points now, because the market was a lot bigger. 1,000 points back then is equivalent to now 2,500 points or so. Right? Because the market is so much higher today. So it would be around 2,500 point drop nowadays, right? But look at that drop into that election. What about 2016? That was Clinton versus Trump, right? Look at this one. So look where we're at, kind of August, September timeframe. We were at about 18,600 or so on the Dow. And we dropped that baby down right here to about 17,900, 17,800. And obviously, it was just a downtrending market. And look where it bottoms. Right around the election again, right? So the moral of the story is the 90 days leading up to the election is absolute craziness. And usually you're going to bottom out in November, right? Now you might say, oh, 2020, we didn't tank into the election. 2020 was a freak year. I don't think 2020 is the best year to look at, because remember what happened in 2020. We had a huge stock market crash in the first quarter of the year, right? February, March, like an insane crash. It was like the fastest crash in the history of the stock market. It was extraordinary, right? And then we had, obviously, the crazy money stimulus pump from the federal government. We obviously saw what the Fed did as well. And so I don't think 2020 is a very good election to look at in terms of trying to figure out, does the market usually tank? That was a freak year. It was a freak situation in regards to that. But the moral of the story is, many times going into these elections, you're going to see a downtrending market. And a lot of it goes back to the algos nowadays. The algos are playing all the odds of like who gets elected. And then it's kind of playing like, oh, you know, if this person gets elected, how does it affect this sector versus this sector? And it's trying to make all these assumptions in the algorithm, right? And it screws with the market big time into an election, because those odds are changing back and forth. I mean, if we think about even like the 2016 election, there was craziness, right? Everybody assumed Clinton, like everybody was convinced Clinton was going to win. Like that was like even Trump, I think, thought Clinton was going to win. Everybody was kind of in shock when like Trump actually won that election. Like, what? He won? Like, what? Trump? No, really? And then the market absolutely took off to the moon because the algos had not priced that in, right? And Trump obviously ran on bringing down corporate taxes and all sorts of things. So all of a sudden the market's like, what? He won? And we took off like a rocket ship right after that, right? And so this is a little food for thought in regards to that. You're going to get a wild market kind of moving into the election, right? Now, also remember, just because this has happened in the past does not mean it's going to happen this year, okay? So we know the odds are the market's going to be tougher over the next few months, but don't bank on it. Because a lot of people think, this is easy, right? Look at these elections. Look at the market usually this time of year. Easy money to be made in put options, right? And then this is like, could be the outlier year where let's say the market skyrockets into the election and then after the election it tanks or something like that, right? And everybody's like, what? Like, come on, it had to be different than the one, like this is the one time. So, little food for thought in regards to that. That could always be a situation that plays out. Once everybody thinks they got the edge on the market in the short term, it flips on them and they just get blown out of the water and like, oh my gosh, another reason to just focus long term, by the way, okay? Next up here, earnings calendar this week, absolutely crazy week. Like, what am I expecting here for these companies? Which companies am I feeling good about versus not good about? And then we'll speak about why I buy stocks on Friday, okay? Oh boy, just look at it, folks. Take a moment, just look at that calendar there. Oh my gosh. What a calendar. What a calendar. I mean, right off the bat, McDonald's Monday morning, I think, should be interesting. And McDonald's, I kind of feel like indifferent about. So, because McDonald's, I look at McDonald's and they're facing a lot of wage pressure, folks. But the thing is, you go into a lot of these McDonald's. Have you guys actually gone into a McDonald's like in the past few months? It's incredible. You go into a McDonald's nowadays, in many of these McDonald's, it's hard to find anybody to even talk to. I'm not joking you. A lot of these McDonald's, you can't even like talk to a worker. You have to go to a digital screen, put your order in, and then eventually like your order number gets called or something like that, and it gets put out there. But many times, in many of these McDonald's, you never even see a person. It's like they're invisible. It's like they might as well just have robots back there making the food and stuff like that nowadays. It's crazy. So I don't know if that's a McDonald's by you guys, but I've been to a few over the past, I would say 6 to 12 months. And I'm just like blown away when I go in there. I'm like, Jesus, like you don't even talk to a person anymore, right? Now, Tuesday, you have SoFi reporting, PayPal reporting. I feel very good about both those. I spoke about SoFi extensively on the reaction channel yesterday. Feeling good about SoFi. PayPal, I should probably do an in-depth video maybe on the reaction channel tomorrow in regards to PayPal. So, but I feel good in regards to that one overall, but I'll probably do an in-depth video there. AMD, Microsoft, feeling good about both those. AMD, we should see growth rates start to uptick very nicely for AMD. Mr. Softy comes through with great numbers every quarter. Like, they just put them up, man. Yeah, no, is the stock price going to go up? That's a big question. I couldn't answer that. But as far as the numbers go, good. PayPal, is the stock price going to go up? It never goes up. So they could come out with great numbers and probably won't go up. Buc-ee's, not feeling great about Buc-ee's in regards to the numbers. The stock could be different. That stock is very beaten down, so there's a decent chance it could pop on earnings, even if their numbers aren't that great. But as far as the numbers go, I'm not feeling great about Buc-ee's numbers. I don't think they magically could fix things there. Not feeling good about Boeing. Boeing's just a screw up. Norwegian Cruise Line should post good numbers. All the cruise operators are posting really good numbers and really good guidances. I didn't circle that one, but that one should be really good numbers there. Wingstop's in a tough situation. That valuation's out of control. Oh my gosh. Go to 1000xstocks.com, pull up the valuation of Wingstop. It's flipping flapjack and out of control. So that's one of those that even if they post good numbers, I'm not even sure if that stock could do well. I'll be completely honest with you guys. They've priced in so much growth, it's insane. MasterCard, those numbers should be good out of MasterCard, so feeling pretty good about that one. And the reason being is you look at Visa numbers that we already have gotten. You look at Amex numbers we've already gotten. Numbers look good. So MasterCard should be good as well, right? Doesn't mean the stock's going up, but the numbers should be good. Meta numbers will be good in regards to that. Feeling really good about Meta. Really good about Meta. Yeah. Guidance should be good for Meta. No problems there. Valuation is cheap. And we already got Google McDougal out of the way. And Google was kind of set a red tone to, because that can kind of bleed over to Meta. And so Google going down kind of already set like a low bar, I feel like, for Meta. So now if Meta comes in with something decent, I think that stock could move up very nice. So I'm feeling good there. Regardless, it's just like it's a steal deal for long term. So if you don't have a position built in Meta, you should hope it goes down. So you can start a position or build a position in that one, right? You should actually root against it. Amazon, feeling really good about Amazon's numbers. They set low expectations. They set a pretty conservative guide last quarter. E-commerce business looks really good. They continue to just slowly steal market share from just about everybody, I feel like. AWS, we should see a nice reacceleration of growth that we've already started to see. So that should be good. Advertising business continues to build. So, Amazon should be looking very good. Apple, don't feel good about Apple's numbers, although I've been hearing some positive things in regards to Apple around China. I do feel good for Apple for 2025 as far as their numbers go because of the new iPhone they'll be having coming out. But I'm not feeling good about the short-term numbers in regards to Apple. I don't think, they got a lot going on there. Coinbase, a big wild card because Bitcoin's been just about everywhere recently. So I think that's a big, big wild card. DraftKings, their numbers should be pretty bad for recently, but with that being said, they should see a very nice pickup in their business, obviously in the fall time, because the football season's starting. So that's kind of how I feel this week in regards to a lot of these companies' earnings. It's a huge week for me, obviously, and like I said, I'll probably speak about PayPal in depth, maybe on the reaction channel tomorrow or something like that, okay? Now, why do I buy stocks on Friday? There's 3 core reasons why I buy specifically stocks on Friday and not some other day, okay? I don't think I've ever talked about this ever. I don't think I've ever talked about this in the private group. I don't think I've ever talked about this on YouTube. So, here we go. Alrighty, so why do I buy stocks on Friday? Reason number 1 of 3. There's 3 core reasons, really. The first reason is, if you look at the S&P 500 performance by weekdays, this goes from 2000 all the way through 2023. Investopedia did this, right? And what they found is on Monday, the market usually goes down a little bit on average, right? Tuesday, the market usually has a very good return. Usually Tuesdays, the market's up very nicely. Wednesday is usually a day where the market does pretty decent on average, right? Thursday is usually the second best day for the market. So, me being a long-term investor, I'd rather buy on a day when stocks are downtrending, right? And if you look at by far and away the worst day for stocks as far as performance goes on Fridays. So I would like to buy on a day in which the market's downtrending, right? Where the market's having a tough day, where maybe you get a lot of fluctuations in stocks for whatever reason, and they're going down big, right? And so that's reason number 1 why I like to buy, because it's usually a big downtrending day for the market in general, right? Where you just can't say the same for Monday, Tuesday, Wednesday, or Thursday, right? Next up here, number 2 of 3 is in regards to the news cycle, right? Listen, when you get earnings are super heavy Tuesday, Wednesday, Thursday. Like, this isn't even a good, view of what's actually going on with earnings, because if we had a full list, Tuesday, Wednesday, Thursday would just go on forever and ever and ever, because there's so many companies that report. And then Friday, this is almost an entire list of companies actually reporting Friday. Friday, you basically hardly get any earnings coming out. So for me, I need to look over all my company's earnings, see if there's anything deterioration in the business model, see if there's any big moves. So by Friday, I have all this info that I can go ahead and make a judgment. Let's say Starbucks. Let's say Starbucks numbers aren't that bad, but let's say the stock goes down 5-10% this week, right? I might go ahead and buy Starbucks on Friday in that sort of situation, because I might look at the numbers, be like, this isn't that bad. The stock was already oversold. Then it's down another 5-10%. Let me start a position here. So I might go ahead and buy that. Let's say SoFi reports really good numbers, but the stock goes down at $6.95 come Friday, right? And I looked over the earnings report. Boom, I got it. And I'll snag some SoFi, right? So that's kind of the way I think about that. Let's say Amazon stock goes down 10% for whatever reason. I look over those numbers Thursday night. I listen to a conference call. I'm like, everything's exactly intact for Amazon for the long term here. Let me go ahead and buy Amazon on Friday rather than stepping in, let's say Wednesday, and then the stock goes down 10-15% on earnings for some whatever reason, right? And then I'm stuck in it and I'm like, dang. Or even worse, let's say I own a stock and there's a fundamental change for the worse, and I'm like, crap, man, this business is actually going through tough times. Do I want to stay in it? Do I want to get out of it, right? I would rather not put myself in a situation where I bought it the day before or something like that. I'd rather just have stepped in on a Friday. So that's next reason. It's a sleepy day in the market. Sometimes you get some economic data on Fridays. I never make my investment decisions based upon economic data. Economic data is going to be up and down. Economics data is one moment economic data is going to be great. You're going to love it. Next minute it's going to be bad. Never make your investment decisions based upon economic data. It's usually a very poor decision. Same thing with making a lot of these Wall Streeters, they always talk about the Fed, the Fed, the Fed. They're obsessed with the Federal Reserve and what the Fed might do or might not do. Don't do that. Don't do that. No, no, no. Like, the Fed is the Fed. They're going to be all over the place. The Fed has no clue where they're going with rates over the next year. They never do. They never have. They never will. Which means then you have no clue where the Fed's going to go over the next year when it comes to rates. And so to try to make judgments off of what the Fed's going to do or not do, or hiking or lowering or whatever, bad decision. Bad decision. So for me, if economic data comes out Friday and moves the market, I don't care. It means nothing to me. Earnings mean something to me. Guidance from companies means something to me. Conference calls mean something to me, right? The rest of it's like, give me a break. Who cares? Unemployment rate is going to go up. It's going to go down. It's going to have tough times. It's going to have good times. That's going to move all around. I need to hear what companies are going on. The third reason is actually related to dopamine. So I feel good when I buy stocks. I really do. And so I like it when at the end of the week, right, I put through my work week, I've listened to all these conference calls, I looked at all these earnings, I've done YouTube videos and private group videos and live streams or whatever it is, right? All this stuff. I like it when on that Friday I could buy stocks, because I actually, even after 15 years, I still get like a little dopamine hit from buying stocks. It's a great feeling for me. I love it when I go ahead and put in those orders to buy those stocks. I legit feel good from that, right? And so it's natural, kind of like you might wait all week to go out to eat, right? You wait till Friday night or Saturday night, right? It's like a good feeling, like, oh, I got done the work week, like, I'm going to go out and have a good time. Or you might go to the bar or whatever, right? And so that's kind of the way I treat buying stocks. It's like, oh, we grinded it out this week. All right, now it's time to have some fun. And so for me, buying stocks is fun. I legit enjoy it, and I actually get a little dopamine hit off that. So that's why I also buy stocks on a Friday rather than a Monday or something like that, right? And every single week, I don't know if you guys know this, but in my Patreon, I buy stocks every single week in there. And so you can actually access that. It's linked in the description of every video. The link, if you want to see me actively buy stocks, sell stocks in the market, you can see every single week the stocks I'm buying and selling in there, in that particular portfolio. And then also in my private group, that one I have the $2 million plus account. The Patreon portfolio, that one's 5 figures now. And that one's building up very nicely. But the big dog portfolio, that's if you're in my private group, you get to see the stocks I'm buying and selling each week in the private group. And that's a $2.1 million plus Fidelity account in that one. Okay, guys. So, and once again, if you're looking to take your game up to the next level, learn how to scale your portfolio, if you want to become a great investor, click the pinned comment down there. You can apply to join my private group and also get access to 1000X, so you can take your game up to a much higher level than where you're at here today. Busy week, folks. I'll keep you up to date with everything between this channel and the reaction channel. Much love and have a great day.